Hello, I'm Donald Leggett and welcome to Share Views, brought to you by London South East. Our guest today is Keith Bush, Chief Executive of Cabot Energy, who are currently extracting oil in Canada and gas in Italy. Welcome, Keith.
Thank you, Donald.
Okay, Cabot Energy released interim results last Thursday. Let's start by summing up those results.
I think the interesting thing with the interim results is it starts to show our production growth that the company's really focused on with our production-led growth strategy. And it's something that since I've been on board with Cabot is we've brought forward in a way that has been really anti the current industry, because of course the industry's been going through this huge downturn that we've had, and what that's done for us is throw up opportunity. We're particularly focused on Canada, but as you say, we're also producing gas in Italy. And as far as our results go, they're the first stage, really, of the new company. We went through a rebrand in July for starting to deliver on what we say we're going to do, and that's really key to what I would like to do in future. Production's at about 400 barrels a day, but we're through the first half of the year, but we're now at 600 to 700. So we've already stepped up from that first half of the year, and we're looking to do that towards the back end of the year as well.
Well, the share price bumped up slightly, so the investors were pleased with what you announced.
Yeah, I think we're showing positive traction so far, but again, it's in the delivery of doing what we say we're going to do. The company effectively is almost a new reborn company that's looking to move forward in the production landscape. We've got very little debt. We've got a clean balance sheet, and we're trying to make sure that we can use the available funds we have to be able to return, so to generate revenue, so that we can then reinvest in the assets to grow them. We have some fantastic assets, both in Canada and in Italy. Production focused in Canada with some light oil production in northwest Alberta. And then the small gas production that we bought in Italy gives us the opportunity to build on our exploration portfolio there, which is world class in terms of the exploration opportunities there.
In terms of the calendar, you hope to achieve a certain amount by October, and then into next year. So if you could give me a sense of what the next year holds for you in Canada.
So in terms of our production focus in Canada, we've got 2 more wells to work on in terms of sidetracking. So sidetracks where you take an old wellbore and drill out into a different part of the existing reservoir. So we're going to do that with 2 wells. And then we've got a recompletion that we need to just turn back on. We've done all the work for that. We just need to get the approval from the government to say we can re-inject into the formation the water that's produced, and then just produce the oil and truck that to our facility. With those wells on, we should be between 800 to 1,000 barrels of production a day gross from the field, with our partner H2P, who are a 25% holder. And then going on into next year, we really want to look at our existing acreage in the Virgo area, which is something that hasn't had too much of a focus over the last couple of years, because we've been looking at the Rainbow area. But Virgo has some great production potential, and we're looking at potentially doing up to 10 sidetracks next year and growing our production, doubling it again to go into 1,500, 1,600 barrels a day by the end of next year from the field. So it's really focused on investing the capital that we have to get the production returns. The good thing about that is that...
And how much is it actually costing you to do all that? Given that we're at that point in the story.
So I think from where we are at the moment, the programme to date for this summer has been about $3 million gross, 75% to Cabot. For next year, we're probably looking at a programme around about, I suppose, $10 million if you take all of the sidetracks into account, and that's something that we feel is actually very good value for the amount of production we're going to be getting. So
that was my next question, actually. In terms of ROI, I mean, where does that put you in a range of competitors?
Well,
where do you sit, do you think?
I think if we're looking at adding very cheap production on a sort of rule of thumb figure at the moment, we've been adding production at around $10,000 a flown barrel, Canadian dollars a flown barrel, which is very cheap. We expect to stay within that range, maybe between $10,000 and $15,000 a flown barrel for the next year.
What's the correlation between the pound and Canadian dollar?
So Canadian dollars is about 1.6 Canadian dollars to the pound, and it's very, very correlatable, of course, to the US dollar as well, about 1.3 to 1.25 to 1.3 to the US dollar. Our crude is a light crude, so it stacks up very well against West Texas Intermediate. And pricing wise, we probably get a price that's about $6-7 less than the WTI benchmark crude, just because of the location where it is in Northwest Canada and transportation costs taking it away. So, from that respect, the value that we can add with production increases from drilling these sidetrack wells is extremely high. And if you went out to purchase that production, you'd be paying $40,000 to $50,000, as we've seen quite recently in Canada.
And your strategy is a little bit more North Sea rather than Canadian or American. Explain that to me a little bit.
Yeah, that's right. So I think that in the particularly recently, with the way the resource plays have been going in the US and in Canada, they've been going through drilling lots and lots of wells and really developing the engineering technology to very extreme levels. We can leverage that, but we can also use the North Sea base where they drill much fewer wells but generate the same sort of recovery from the fields, and that's by using a lot of seismic, doing some low-cost modelling of the reservoirs to determine where the best spots to drill are, and then developing the fields in that way, rather than just using a real scattergun approach to where they've used in North America before. And so it's combining the best of the two technologies to try and enhance the recovery from these fields.
I'm quite intrigued. You work both in Canada and in Italy. So if you were to look at your revenues at the moment as is, how would you break them down? Is it 80% of revenues come from the Canadian fields and 20% from gas in Italy, or how does it work?
It's about that. And of course, the Italian deal that we've done, we're still waiting for completion on that. So the actual revenue that we'll get from that for this year won't come in until that deal completes. But of course, when we go on to next year, should be done by the end of this year. It's going to be about 80-20. With a growing production in Canada, that will shift towards the Canadian side. But we haven't really got into the Italian assets yet and done a full, thorough review of what we can increase production-wise there. And the benefit we have for the operations in Canada is we can take the experience from Canada and apply it to the Italian fields, apply their engineering expertise, which is second to none, and improve our production from Italy as well. So it's kind of the two work really well together.
So tell me about Italy. You're actually extracting gas there, and you've got a relationship with Shell. Tell me about that.
That's right. Yeah. So originally we were in Italy. We had very strong exploration presence. We didn't have any production, and we really wanted to get a bit more of an identity with the Italian regulator and the ministries there. So we saw this opportunity to acquire these production assets from Rockhopper. We picked that up, and it's helped us very well in terms of really understanding how we're going to be able to move forward with the exploration assets in Italy. We have this relationship with Shell whereby they operate our onshore license, the Casino Alberto license, which is in the northern part of Italy, and they're going through the exploration phase of that. So there's some seismic work to be done there, and then potentially drilling of wells in the future. But having the production up front allows us to be able to at least establish the operating base in Italy for future ventures out with the really big well events that we could potentially have over the next 5 years.
It's tough to get permitting in Italy, so therefore it's good that the regulator knows who you are.
Absolutely, yeah, and we have a very good dialogue with the regulator, and it is tough to get permits, but we've managed to get things through over the years, and we're moving forward with our 3D seismic in Southern Adriatic. We should be starting some anti-operum survey work there over the next few weeks. So that's been significant progress from where we were a couple of years ago, where we couldn't get permission for our environmental impact assessment. So it does move forward. It's just in a different time frame to the way that Canada does. Okay.
And your balance sheet, you said at the start of the interview that you were it was pretty clean and you were feeling quite happy with it. And you've got some cash waiting to be spent. So
that's
tell
right.
Me about
that. We've got $3.5 million as we said at the end of our interims. We have a couple of options to come off. So we've got the production revenue coming in from the Chivita acquisition from Rockhopper. We've also got our strategic partner H2P have an option to exercise to purchase another 25% of the Canadian assets for $4 million US. So there is the potential for that to come in. Alternatively, of course, if they don't exercise that option, we have the increase in production through maintaining 75% there. So it kind of works well either way. We have a very good relationship with H2P, so we'd like them to come in and take on exercise their option. But of course, if they don't feel that they can do that, then we're quite happy to move forward with the additional production we'd have.
So is that a sort of partial exit, and is that how you see the business going forward?
Yeah, absolutely. I think that we look to the future for the business is through having the production that we have, increasing it through to the sort of 5,000 barrels a day plus potential that the existing assets that we have can give, and then potentially acquiring bolt-ons in Canada, growing the production in Italy.
But so you're looking for something cheap, and then you're going to sell it on.
Absolutely,
and then keep rolling and rolling,
and increase the potential from those assets. So we're picking up distressed assets like we have done, increasing the potential from them, and then selling them on in the future. But also we have potentially 3 or 4 very material events in Italy from exploration wells that would just be completely game changing for the company, and that's something that will happen over the next 3 to 5 years.
Okay, so the mid-term outlook very strong.
Absolutely, yeah. I think we're pleased that we've come through what was a very tricky patch in the industry, and now we're looking forward to our production growth, both in Canada and Italy, and then getting through our exploration projects, and yeah, very strong.
That's it for now. Thanks to Keith for joining us, and as always, thanks to you for watching.